I'm Charlotte McLeod with investingnews.com, and here today with me is Gary Savage, president of the Smart Money Tracker newsletter. Thank you so much for being here. Great to have you back once again.
Well, thanks for the invitation.
Of course, I think we've got a lot to get into today, but where I thought we could begin is with gold's recent price activity. It's been a pretty exciting week and a half or so. We saw gold get past 5,500 per ounce, then have a pretty significant correction. Now it looks like it's trying to make a recovery. So I wonder if you can walk me through what was going on with the big rise, the drop, and where we're at now.
Well, we're in a correction. It still remains to be seen whether this is a minor daily cycle correction that may already be over. We may have printed the bottom a couple days ago, or if it continues and we got to go down and make a lower low, like an ABC correction, then this might turn out to be something that lasts a little longer, an intermediate degree correction. If that's the case, then it'll be maybe third or fourth week, and we would have at least 2, maybe 3 more weeks to go before the final bottom. But markets don't go straight down, so we'll have bounces, and so I tend to think most of the damage is already done. If we do have to make a lower low, I don't know that it's going to be a huge lower low. And then once it's over, we'll, it's just like every other correction that we've had for 6 years. Once they run their course, then the next leg up begins, and you get higher highs. That's the definition of a bull market. So bull market's not done. We still got. And I think we got big new highs coming once this correction's over. And once we clear the sentiment got pretty bullish. People were starting to make plans to buy their island. And that's usually about the time that you got to have some kind of a correction. So that's what's happening. Nothing out of the ordinary.
Well, it's good to get such a calm perspective from you on what's happening right now. Maybe we could talk a little bit more about what did cause that correction in the gold price, because like you said, there was a lot of exuberance. And then when it was happening, people were feeling pretty nervous. So what was the reason that happened, do you think?
Well, I think there's two reasons. One is just sentiment. And you see this you see it at both bottoms and tops. People, there's a narrative. There's a reason for why price can't go down. When you're high and you're going up towards the top. Asians are buying, and that's the reason that there's shortages, and that's why price can't go down. Or if you're in a correction, there's the bull market's over and it's never going to go back up. There's always a narrative, and so at some point, sentiment, when you're getting close to a top, sentiment gets so bullish, there's just nobody left to buy. Everybody that's going to buy has bought. And so at that point, it doesn't really matter what the fundamentals are. The sentiment will overpower the fundamentals, even though the fundamentals haven't changed. We still got shortages with silver. It's just there's nobody left to buy right now. And so then price has to correct. And then what happens is smart money starts to sell. They take profits. You start to get a little correction. At some point, people start to get a little panicky, and they want to sell. Their stops get hit. They want to sell before they've lost all of their gains. That kind of exacerbates the selling. And I'm talking about an intermediate degree correction here. And that continues until the exact opposite happens. There's nobody left to sell. And then when that happens, the fundamentals resume. You still got shortages. And so the buyers come in, the smart money that took profits at the top, they start buying at the bottom. And the market goes back up and it makes higher highs. I tend to think we're probably in the parabolic phase of this bull market. I know I'm a little different than a lot of other analysts. A lot of people want to say this bull market's just getting started. No, this bull market's been going on since 2001. This is a very mature bull market, and we've started to go parabolic. There's usually a correction in the middle of that parabolic phase, especially for silver. There's a decent chance that this is that correction. It's volatile, it's scary. People become convinced that the bull market's over. and it ends up being a huge bear trap. And then you get a bottom, and then the next leg up ends up being as good, or in this case, I think multiples better than the first leg of the parabolic move. So the last 2 months have been, amazing for, especially if you were leveraged. You made life-changing gains during this last 2 months. Your complacency is going to get washed out here, and a lot of people are going to, assume that the bull market is over, and then they're going to get stuck on the sidelines when the second phase of the parabolic move starts. And the second phase, I think, will be several times bigger than what we just went through over the last 2 months. So we went from 50 to 120. I think the next leg, when we're ready to break out above that 120, could take us to, it's easily going to take us to 250. I mean, that's only 100%. That's easy during a parabolic move. That's almost standard during a parabolic move. But for metals that are much more volatile, I think there's a very, very good chance at this point that we could go from 120 to 500. So I think the next leg is going to be a lot bigger than this first leg. And you think you made a lot of money during the first leg? You haven't seen anything yet.
Well, and hopefully people are still in and waiting for that last part of the parabolic move. Maybe you can help me understand a little bit more where you see us in the cycle for gold and silver, because it is a little bit different from everybody who's saying that this is just beginning. So this was perhaps the first parabolic move, then there's a second. And after that, is that the end of the bull market for gold and silver in your view?
Maybe, and I'll qualify that. Generally, these commodity bull markets, they unfold in two phases. So the first phase of the bull market was from 2001. Well, it double bottomed. So you could say either 99 or 2001. Double bottomed, gold did at 255. So let's say you pick 2001. That's where the bull market started. The first phase ended at that top in 2011. But that wasn't the end of the secular long-term bull market. That was the end of the first phase of the bull market. And then we had a cyclical bear market, fairly short. What was it, about 4 years? It ended in the fall of 2015. And at that point, we started the second phase of the long-term secular bull market. So this phase, the second phase, is getting pretty mature. Started in 2015. We're in 2026, so we're getting close to 11 years at this point. And we've started to go parabolic. Gold, when they failed to keep the suppression at 2000, you can see what happened if you pull up a long-term chart. The character of the market changed. That was because the banks were caught in a short squeeze in the gold market. Eventually that kind of bled over into the mining stocks. They had big moves. Silver was the last to break the suppression. I thought it was completely broken, but I guess they still got a little bit of firepower here, because that was the second part of why this correction is happening. Some of it is we just got, way too bullish, ran out of buyers. We were due for some kind of correction anyway. And I think the banks took advantage of that and coordinated a huge overnight attack that dropped silver, whatever it was. I think it was almost 30%, or maybe it was 30% almost overnight. That allowed them to get out of their shorts, because a lot of those contracts were going to stand for delivery, and they were going to have to buy physical silver at $120 an ounce to deliver. So I think some of it was just sentiment got too bullish, and some of it was the banks needed to bail out, get out of those short positions. So I think that's probably what's happening, but it's not going to hold any more than any of the other corrections held. It's just going to make the shortages even more extreme, which just means that price is going to go even higher during this final phase. So, if our final target naturally would have been $250 silver, this probably guarantees the shortages are going to be worse, and that the odds are more likely now that it's going to get to $500.
Where does that place the gold price in your mind then?
I think gold probably has a double from here once we break out. So I think our top was close to 5,600. I think maybe it even tagged 5,600. I think we're probably going to double during the last final parabolic bubble phase of this bull market. So once this is over with the correction, we start the next leg up and we break out above 5,600. I think we're probably going to at least double from there. So I think 10,000 is almost, I'm going to say it's a piece of cake. Doesn't mean it's going to be an easy ride to get there, but I think it's going to be a piece of cake. And we might even get to 11 or 1,200. And now the other part of your question, I almost forgot. The other part of your question is this over when this parabolic move tops? Generally, I would say yes, although it might be that we just have a cyclical bear market. So let's say we get a parabolic top later this year or maybe early next year, and then we get a cyclical bear market. The same thing that happened from the 2011 top to that 2015 bottom. That was not a secular long-term bear market that lasted 15 or 20 years like the one from 1980 to 2000. It was just a cyclical bear market. It is very possible that might be what we would have this time, is just a cyclical bear market that lasts, the next 8-year cycle low is going to be due in 2030. So maybe it's only a 3-year cyclical bear market, and then we end up having a third phase to this long-term bull market. I am open to the possibility of that. But keep in mind, these parabolic moves, they tend to crash. So we could go to $500 silver. We could crash all the way back down to $100 or even $50 silver. And then potentially we could start a third phase of the bull market that could take gold to 30, 40, 50,000 during that third phase. So it's possible. I'm open to the possibility.
Well, and just to get an idea of your process, so there's all of these different possibilities that could unfold. So you're constantly evaluating and reevaluating what you see in the charts to figure out what direction we're actually going to go in.
Yeah, you have to be willing to change directions, and you can have your expectation, but if the market tells you that your expectation is not going to play out, well, then you have to adapt. Longer term, I don't see any need to adapt. I think we're still in a bull market. The gold silver ratio has not gone below 30-1 yet, and I expect that this attack by the cartel probably means it's going to go to 20 or even 15-1 before we get our final bull market top. So there's no need to adapt any of your long-term expectations at this point. Short term, maybe. This may turn out to be an intermediate degree correction rather than just a minor daily cycle correction. Again, it's not going to change the long-term outcome. It just means that the correction may last a little longer than first anticipated. My anticipation was that this was going to be a daily cycle correction and would be over, 8 to 10, 12 days, and then we'd start the next leg up. And that may still be possible. We just have to see what happens to gold here tomorrow and next week. If gold breaks back above that 10-day moving average, then we probably got our bottom here a couple days ago, and this is just a minor daily cycle correction. We'll go up, maybe hit 6,000. Then we'll get that longer term intermediate degree correction, something that lasts 4 to 6 weeks, maybe. Otherwise, if this continues a little longer, then this turns into that intermediate correction. And so, just arrived a little sooner than I was anticipating, but it was going to happen anyway. And it's not going to change the long-term view. So it's nothing to panic about.
I want to ask you a little bit more about the silver suppression angle as well, because I remember last time we spoke, you'd mentioned it's a market where that suppression has been able to hang on longer than it has in other places. So are we at this point entering the last gasps of that? Is it coming to an end at this point?
I tend to think this will probably be the last one. Now, they've tried multiple times during this last 2 months to stop this rally. And every time they did, the buyers would come in and just kick them in the teeth, and they'd lose more millions of dollars. But we've reached a point where sentiment was extreme enough that we were going to run out of buyers. And I think they just jumped on the opportunity and slammed it in the middle of the night and slammed it hard enough to where it went down to where people really started to panic and sell. And they were going to be profit taking anyway. But I think people have a tendency towards recency bias, and they're going to assume that since this suppression worked, that the next one's going to work, and they're going to be gun shy. And that's going to mean that people are going to sell way too early during that final parabolic move. That they'll want to sell at $150 silver, $175 silver, and they'll miss the move to 500. So don't let this, get lodged in the back of your brain that you've got to, that the cartel is going to attack again and that you got to get out early, because I think you're going to miss those once in a lifetime opportunity. That's the next phase. I think is going to go much further than most people expect. Really, I think you don't really want to sell until that gold silver ratio gets down to at least 25 to 1, and we may go as low as 15 to 1.
Well, maybe I ask you a little bit more about your exit strategy when it comes to gold and silver, because already when we got to the triple digit level for silver, I know a lot of people said, all right, we got to $100. This is time for me to take at least some profits. So how are you approaching it? Are you just holding until we get to those higher levels that you see coming?
Well, I'm not going to sell any of my physical until I see that gold to silver ratio, at least at this point, probably at least 25 to 1. So at that point, I would probably sell 75% of my my physical gold and silver holdings, hang on to the last 25%, see how much further, maybe it can get down to 15 to 1. I would sell all leverage and even if we get below 30 to 1, I would probably sell at least 50% of my leveraged trades, probably 75% of my leveraged trades, and maybe just go completely unleveraged in my trading account. Now, the physical is a much bigger position for us. My recommendation, and pretty strict recommendation, is 80% physical. Physical that's your insurance. We can trade that other 20% in leverage. We always err on the side of caution. So like if we're trading options, we're always going to buy a ton of time just in case we get caught. Like if this were to turn out to be an intermediate correction that's going to take several more weeks, we need a lot of time on those options. That's exactly what we did. We bought a ton of time just in case we get caught. So that's our protection for our leverage. But also our leverage positions are just much, much smaller than our physical position. And I expect over the long haul, we're probably going to make a lot more money in our physical position, our quote unquote, get rich slow position. The leverage is our get rich fast position, but sometimes the leverage is our very painful position if you get caught and have to hang on for a few weeks while we work through a correction. So those positions are much smaller than our physical position.
So it's more, when you're deciding when to sell, it's more about the ratio than about the price.
That's how I'm going to judge that we're getting close to that top, is that ratio. And we may also get a Dow gold ratio that's maybe down to 3 or 4 to 1. That would be something else I would look at. So there's no real specific price that I'm absolutely going to take profits at that point. If silver's at $250, but the silver gold ratio is only at 40, well, I'm going to keep holding. If the Dow gold ratio is 15 to 1, I'm going to keep holding. So yeah, I'm not going to pick a set price where I'm going to buy. I'm going to be watching probably those two ratios would be. And then also another thing to watch for is just kind of pay attention to what's happening around you. If your neighbor is bragging about how much money he's making in gold and silver, or the people you work with that know nothing about gold and silver are bragging about, they're getting rich in gold and silver, that's a bell ringing that you're pretty close to the top. We saw that during the housing bubble. You saw it during the tech bubble. People doing irrational things, people that had no idea what they're doing. They just know that their neighbor's getting rich and they want to get rich. So that's something else to look for. Look at, pay attention to those two ratios, and then pay attention to what's happening in the public. If a lot of people that, have no idea what they're doing are starting to brag about getting rich in gold and silver, maybe time to dance close to the door before that last chair gets pulled away.
Yeah, I think that makes a lot of sense. And I wonder, just as we're talking about the physical metals, do you think we reach a time where it becomes hard for people to actually get their hands on the physical metal?
I do suspect we're going to see some shortages at the bullion dealers when we get close to the top, just because there'll be um, so much retail buying, and I've got some inside connections with some of the bullion dealers, and during this smash, their buying was 2 and 3 times higher than any other time in history. So a lot of people are seeing this for what it is. You know, if you want to buy physical, the banking cartel gave you an unbelievable gift. Use this to load up on your physical.
Makes sense. And I want to ask you as well about the gold and silver mining stocks. We've been talking about how you have a different approach than many people. And one thing I've been hearing recently is after that silver price move, people are saying, well, now it's time to rotate over to the silver stocks because they haven't had that catch up move. How do you approach the mining stocks?
Well, I think they did have that catch up move. If you look at the last 2 years, the mining stocks have gone crazy to the upside. And silver was still suppressed under $50, but the miners, GDX had broken out to new highs, and I haven't actually checked what the price of GDX was, but considerably above the old 2011 highs or 2010 highs. I don't remember when it was. So, in my view, the miners, well, gold was the first to break the suppression. That resulted in a huge short squeeze. The miners were second to break the suppression. They had a very nice move. I certainly think the miners are going to participate, but I tend to think that silver is going to outperform. Now, there will certainly be some junior miners that are going to go up, 2,000, 10,000%, but what are the odds I'm going to be able to pick that or put all of my capital in that one or two juniors? Not very good. You can certainly, do a little bit of gold, a little bit of silver, a little bit of a little bit of mining stocks, but I'm probably going to focus mostly on silver. I think it's going to outperform, and if I want to use leverage, I think I want to use it in silver for this final. Once we finish this correction for that final parabolic move, because I think silver's probably got a date with $500.
I think that makes a lot of sense. And, we've been talking about how gold and silver are in this parabolic time. We're getting toward the end of this bull run, probably in the near term future or so. Are you already looking ahead to where you might want to rotate after the parabolic move in gold and silver is finished?
Well, a potential spot might be Bitcoin, of all things. I'm not a big Bitcoin fan, but if something is going up and you can make money off of it, so be it. Bitcoin has confirmed that it's in the declining phase of its 4-year cycle. That usually takes about a year, so I'm not really going to look for a final bottom in Bitcoin until maybe the end of this year or maybe beginning of next year. Same thing might happen for the stock market. It's kind of getting into that timing band where it needs to move down into the 4-year cycle low. So, if we get a final parabolic move in gold, like maybe this summer or later in the fall, possibly in the spring of next year, although that seems like a bit stretched. And then if at that point everybody just hates Bitcoin or everybody hates the market, and they're really in love with gold and silver, well, it's probably time to sell your gold and silver and go buy one of those two things that are really hated, because they're probably at about the end of their correction, their multi-year cycle correction, and it's time to switch over and go to one of those for a few years and let gold finish that move into the 8-year cycle low, which I think I mentioned is probably due in about 2030. Maybe that would be the point at which I would start looking at gold again, but probably Bitcoin is going to be what I'm going to say. It's more volatile than the stock market. The percentage moves are bigger. So if it's time to sell gold and silver and look for something else, I'm going to be looking at Bitcoin.
Well, it does sound like that could really line up into an opportunity. And I'll just ask one follow up on the stock market. I know that people have been watching what's going on with all of the AI stock momentum. They've been really wondering if there will be a significant correction there. Is that what you see coming? Do you see a large correction, or how do you see it?
Like I said, we are moving into the timing band for a 4-year cycle low. The last one was it was 22, I guess it was when our last 4-year cycle low bottomed. So we're kind of getting into the timing band here. This fall will be in that 4 years from the last bottom, and you need some time for the declining phase of the cycle. So, but I don't think that's going to be the end of the secular bull market. The secular bull market started at that bottom in 2009. We're in a new technology phase. The world goes through these. The last one was from 1980 to 2000. It was the personal computer and the internet. Before that, it was electronics and plastics. Before that, it was the automobile and mass production. We're in a new technology, AI, robotics, nanotech. I don't think those are mature yet. AI may be in the adolescent phase. I don't think it's in the infancy phase, but I think it's in the adolescent phase. I think it has further to go. Robotics are certainly in the infancy phase. So I think once we get that 4-year cycle low, I think there's going to be another leg up into like maybe 2028, 2029, and then we'll see a true parabolic bubble phase in the stock market, similar to what's happening in the metals right now. So Bitcoin and stock market are definitely potential spots to look at once we get a top in gold and silver, and I do think the stock market has further to go before we enter another one of these 10-year or bear markets like we had from 2000 to 2009. That was a secular bear market where we were just going sideways. We'll have another one of those, but I don't think we're ready for it yet.
That helps me understand, I think, where your head is at when it comes to all of these different components. This has been really great to go through what's happening in gold and silver. I wonder if you have any final thoughts that you would leave investors with. I think it's great to talk to you because you're staying so calm in a time when not everybody is able to do that.
Well, that would be my advice: is stay calm. This is a correction, no different than every other correction we've had for years and years. It will end. The next leg up will begin, and I think the next leg up is going to be even more aggressive than the last 2 months were. So don't get recency bias. Don't get overly negative. This will pass, even if it's an intermediate degree correction. I think most of the correction has already occurred. So I don't think there's a whole lot of downside risk at this point. But there's a tendency for people to get very negative, just like they get, excessively bullish at tops. They get excessively negative at bottoms. And then they're extremely worried about trying to time a perfect entry. And you don't need a perfect entry in a bull market. And you could buy at the exact top of the intermediate rally and still make insane amounts of money. Even though you'd have to weather, multiple weeks of correction and it'll be painful, it's not going to, you're not going to lose money. Any long entry in a bull market is going to be a winning trade. So anywhere in here, you don't have to time a perfect entry. Just at some point, take the leap, pull the trigger. If you're a little early, so be it. You're probably close enough, and the bull market will eventually turn and go back up, and it will rescue any long entry right now, even if it's not a perfect entry and not the exact bottom. So get ready to pull the trigger, and then just be patient. The bull will do its thing, and you're going to make lots of money in the weeks and months ahead.
Well, very, very reassuring note to end on. So thank you so much for coming on to share your perspective. This was really helpful for me.
Well, thanks for having me back.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Gary Savage.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.